the lead lecturer on the course on cryptocurrencies and blockchain for the Sofia University Master programs on Fintech. But when I say lead lecturer, it means that I only took about probably 1/3 of the classes. Everybody else was a guest lecturer. We decided that the best way to organize such class, because everything changes all the time, is to have guest lecturers who would be, let's say, coming straight from the field. So today we are very happy to have you. And I was going to introduce the topic on the digital euro. I just said that probably the topic became relevant, I would say, about 2 years ago. Last year, approximately a year and some months ago, I was following that there were some news in development, but and the news were broadcast in the Bloomberg, so this is how I knew about it more. But I would be very curious to hear how the things are currently. What you can tell us about more about the topic and so on. And with this, we are already streaming, and I'm going to put a record just as a backup.
So this meeting is recorded.
Yeah, this meeting is recorded. So with this, I'm going to give you the floor. The way we are doing it here is that we have a lecture of as much time as you need, and then we switch to Q&A. Typically, the Q&A for the Q&A, all the participants are actually. I would like to remind them to write their questions in the chat, and I'm going to moderate them and relay them to you. And also, if I have some reserved questions as usual to ask you. Okay, I can see that we have some connection issues, at least the quality is falling. So I will ask everyone else to switch off their camera. I will switch off my camera as well. And with this, I give you the floor. Of course, I hope that you would spare some sentences to introduce yourself better.
Okay, thank you very much. Okay, yeah, hello to everybody. My name is Cyrus De La Rubia. I'm a chief economist at a German bank, Hamburg Commercial Bank. It's in Hamburg, like the name says. It's a commercial bank which does business in shipping, in infrastructure, in real estate, and also corporate loans. And I, as a chief economist, I'm looking for any issues which have to do with monetary policy, with whole economic issues, and obviously digital money and the digital euro, which will come in a few years, are relevant in this respect, and that's the reason why I'm also digging into this subject. And obviously, it will also mean some changes for banking. We are now, for example, with other banks and other associations of banks in discussion with respect to responding to a survey of the EU Commission about the digital euro, how the design should be done and which features it should have. And well, that's a quite interesting discussion because the interests of the banking sector are not homogeneous and are certainly not always the interests other groups in the society might have. But my view, well, an economist always tries to have a, let's say, a perspective from above and to look at the issues that are really improving the society in a way. And so in my view, the digital euro is a very good idea for doing this. And so let's start with my presentation.
You should be able to share your screen.
Yeah, let me check. It's Freigabe aufgehoben. He tells me.
Just a second. I think I will have.
Host had deactivated.
Just a second. I'm going to. I'm working. I'm just waiting.
Yeah. Okay. Okay. That's fine.
Okay. Try to share it again.
Okay. I try to share it. Yes. Now it works. And it's this one. Okay, can you see this?
It is, yeah, we can see it already. Okay.
Okay, great. Now, this is the agenda I've prepared for you. The first second. I will try to explain.
Excuse me.
Yeah.
We can see your presentation. That is not the full screen presentation. Probably you have shared the presentation window only. I think the best way to do it is to probably share your screen, full screen.
So better to share the screen. Okay, I see.
Yeah.
Let me. So
yeah, stop sharing and start it.
Okay. Stop sharing and then
screen.
So screen.
The top
yeah.
left.
Yeah. Let's try now.
Yes.
Now it's okay.
Yes.
Okay. Great. So this is the agenda I've prepared for you, and I will go through some questions, like, for example, how advanced central banks are with respect to the development of CBDC. You may have heard that some countries already have CBDC. Then defining CBDC, defining central bank digital currency, also in contrast to other forms of money. And then I would like to go a step back and look at the current system and the current system of payment, because if you talk about money, it's always about payment. You don't have money as such, but you have money to make payments. So we have to look at the current payment system and the role of banks in this payment system. And then I go over to a simple payment system with central bank digital currency and the role of banks in this system. Or if, and the question, do they have a role at all, banks, in such a system? And then I will go to one important question, which is comparing account-based and token-based CBDC. So a token means that a blockchain is involved, or I define it in this way. And well, then I go to the basic question, which many people also ask me, is why is there a need for digital euro, or is there a need for a digital euro, given that we have so many possibilities to make payments already in a digital way? Why should we now start with a digital euro from the public sector? Then there are other questions which we could go into in the Q&A. I have here some proposals, but I hope that you have other questions also. So, for example, the fear of having a bank run due to the introduction of a digital euro. Then El Salvador, maybe also an interesting subject to talk about. The question is if Bitcoin, which is a legal tender in El Salvador, is a competitor for CBDC. And also the question is central bank digital currency and stablecoin, is this the differences between them? Okay, so let's start with a look on how advanced countries are with respect to a central bank digital currency introduction. And what you can see here is a map where you have a, well, differentiation between countries which have a pilot project. This is, for example, China and Canada, or a proof of concept like Brazil and Australia. And there are also two countries which have already launched a central bank digital currency, which is Bahamas and Nigeria. Bahamas with the cent dollar and Nigeria with e-naira. So you can see that, and many are doing research on it. So you can see that it's really a big subject in the research departments of the central banks. The Bank of International Settlement, the BIS, they are doing regular surveys about the progress in CBDC research and introduction. And for example, in the latest survey, 88 central banks were asked, and about, I think, 70% or something like that have said that they are very confident that they will introduce CBDC in the next 3 to 5 years. So or soon, let's say. So this is really a relevant topic, and I'm sure that over the next few years we will see more and more countries to come in and introduce CBDC, not only the euro area but also other countries. China, for example, is also already quite advanced. They have started pilot projects in many cities and are quite successful in doing it, and quite ambitious also to be one of the first big countries to introduce this currency. So the question is what is CBDC and how does it differentiate from other forms of money? And I like quite a lot this so-called money flower, which is designed by the Bank of International Settlement. And what you can see here, or how to read this money flower. So if you see, for example, the red, how it's called, the red
ellipse
line. Pardon?
Ellipse.
Yeah, right. The red ellipse. Very good. Thank you. The red ellipse. All the money forms which are in this red ellipse, they have the issue that they are widely accessible. So this is the common thing the thing they have in common. All the ellipse, which is blue, there the common issue is that they are digital, and orange means that they are token based. And now you have some overlappings, and all overlappings which are gray, they are a form of central bank digital currency. For example, let's take the central bank reserves and settlement accounts. So the top gray field, it's issued by central bank. It is digital because it's in the blue ellipse. It is not widely accessible because it's central bank reserves which are only available for banks, and it's not token based because it's account based. Now this is a form of central bank digital currency which does already exist, because banks, they do have an account with the central bank, and that's the main issue, that's the main point, or that's one possibility to have central bank money, but it's only accessible to banks. Now, if we go to the left bottom, the central bank accounts general purpose. This would mean central bank accounts for everybody. This is central bank currency. Well, it's retail central bank currency. It is widely accessible. It is central bank issued. Once again, it is digital, and it's not token based. Now, then we have another possibility. It's the bottom gray field, which is token based, digital, and widely accessible, and obviously issued by the central bank, because we are talking about central bank digital currency. And this is then a token based digital currency issued by the central bank. This would be a blockchain based, for example, a blockchain based central bank currency would be a token, a digital token issued by the central bank. Now, where is Bitcoin? Bitcoin is obviously not one of those gray fields, because it's not issued by the central bank, but it is issued, well, decentralized. And you can see it on the bottom. It's a token based, it's digital, it's widely accessible, but it's outside the green ellipse because it's not issued by the central bank. So this is the field where Bitcoin goes in. Okay, so this gives you, in a way, a framework and an idea about the definition of central bank digital currency. It shows you that there are many forms of central bank digital currency. Now, let's take a step back and let's see how the current system is working. Well, on the top of the payment and money system, you have the central bank. And below this, you have banks. Well, banks like mine, for example, like the Hamburg Commercial Bank. And each bank has, as I mentioned it, a central bank account with the central bank. So I have said, okay, we have Bank A, Bank B, and banks. It should be Bank C. Each bank has an account with the central bank, and each bank has also depositors, has clients which have deposits at Bank A, and there are other clients with Bank B which have deposits with Bank B, and we have clients at Bank C which have deposits with Bank C. And these deposits are, well, the basis of the deposit money. So if client A wants to send money to Bank B, then it sends deposit money from Bank A to Bank B. We go into this later on, but this is the system that we have here. Now, if we introduced central bank digital currency for a general purpose, so for every client, then we would have such a system in a simplified form. So every bank would still have a central bank account, and every client would have also a central bank account. So for every client you would have the same system, or you would have also an account like, or let's put it this way, in today's world only banks have a central bank account. But if you introduced central bank currency account based for everyone, then every individual would have a central bank account. And you could then why you need then still banks. And indeed, you could really say, no, well, we don't need really banks because the central bank could do the payment service. So with respect to payment service, you would not really need banks anymore. Because the payment service would be offered by the central bank. I'm not sure. Here is some noise. Do you hear it too?
Yes, but I'm not sure where it comes from. So go on. Don't.
Okay. Go on. So this, for example, was a discussion among the bank associations we had today. If we should encourage the central bank to offer this payment service or not, because obviously it's a competition for banks. But my feeling is that the central bank, the European Central Bank, is not really interested in doing all this business themselves. Rather, I would think that they want to delegate the management of the accounts to the banks, because they already have the knowledge and also the instruments of doing so. So perhaps this competition, which many fear, may not be the big issue we have to fear from the banking perspective. I don't think that the consumers really fear such thing. So this is so that I have the central bank accounts of each bank, and then you have central bank accounts for all clients, but the onboarding and the administration to private banks, it's not managed, administered by the central bank, but nevertheless, we have still central bank accounts. So it's really money with which the banks cannot work like they have done with their deposits. So there's a big difference, because it's like having having, for example, stocks in custody. A bank which has stocks in custody cannot work with these stocks, with these equities. And the same would be in principle if clients have central bank digital currency and they say to their bank, please take them into custody, but I want to have my access to this money, and you are not allowed to work with it. But at the end of the day, it would still be at the bank and administered by it, and the onboarding to do so would also be done by the bank. Now, another step back, or looking a little bit more into detail how payments are working. So what happens in the traditional banking system without central bank digital currency for everyone? So like it is happening right now. What happens when a payment is done between two individuals? So let's take Alice and Bob. The Bitcoiners among you may know Alice and Bob. I put them into the traditional word, Alice and Bob. And Alice has deposits with Bank A of 5,000 euro, and Bob has deposits of 900 euro with Bank B. And Alice now sends 50 euro to Bob. So this is in the traditional banking system. So what happens? Alice's account is credited with 50 euro. So it's not 5,000 euro anymore. It's only 4,950. And on the other hand, Bob's account is debited with 50 euro. So it's 50 euro more. Now, this is not all. Another thing is happening, because at the end of the day, the balance of all transactions will be documented by the central bank, because the central bank wants to know that no new money is generated without their knowledge. And we make now here the simplifying assumption that only this single transaction has taken place. In reality, it's obviously millions of transactions which have taken place, but let's assume for the sake of simplicity that only this single transaction has taken place. And at the end of the day, the following will happen. There is this Bank A's central bank account, and this central bank account has central bank reserves of 1,005,000 euro of Bank A, and the Bank B has central bank reserves of 2 billion euro. And now we have this transaction, Bank A, we had this single transaction, and now this transaction is replicated by between those central bank accounts. So Bank A has to transfer 50 euro to Bank B. So what happens? Instead of having, at the end of the day, 1,005,000 euro, the Bank A has only 4,950, and the Bank B, where Bob is client, they have now at the central bank reserves 2,050,000,050 euro. So Bank B's account is debited with 50 euro. So this is what is happening in the traditional system. So you have this two-step procedure. First, the transfer of money between banks, and then you have to replicate this transaction at the central bank accounts of the bank of those clients which have done transaction between each other. Now, if you have now the central bank account for everyone, the things change, because then Alice has an account with the central bank and not with Bank A, and they have CBDC of 5,000 euro, and it sends 50 euro to Bob, and then 900, instead of 900 euro, he will have 950 euro. So this means, and now we are done already, because now these are already central bank accounts. So really, central bank money has changed hands. And so you don't need to have this other step which we have in the traditional system. If we do it like this, and if we do payments through the central bank digital currency system. So this is I think one important or the main important thing that we have to understand when we talk about central bank digital currency. And this is also the reason why banks fear that they could be eliminated as intermediate institutions in the payment system. But as I said, I don't think that the central bank will go so far, but it obviously depends also on the central bank. I think that the euro, the ECB will delegate the onboarding and the administration of the central bank accounts. So I don't think that this business will be taken away from the banks. And what they will also do is to have, well, it's not fully clear, but it seems so that they will have a cap on the central bank account. So this means, for example, each individual can have an amount of, let's say, 3,000 euro on its central bank account. And this is the maximum. And if more money, let's say Alice has already 3,000 euro on its CBDC account, and now more money comes in, then this will be shifted automatically to the usual banking account, to the usual deposits, so that this cap of 3,000 will not be surpassed. Why is this one plan to do? There is one big fear among bankers and also central bankers, which is that in a panic, it might happen that the private households, that the individuals which have a bank account, that they shift their money altogether into central bank digital currency, which is the same like a bank run. So they would withdraw all the deposits from the bank and shift it into the central bank account. And then the banks would have no money anymore to work with, and they would go bust. Which has happened, for example, in Greece, in Cyprus, in Argentina. I think that there was also a critical situation in Bulgaria in 2014. This is the thing which will, well, it's feared that it might happen with the introduction of central bank digital currency, and this is the reason why they might introduce a cap on the amount of central bank digital currency. Okay, so then let's go over to another point, which is about the design of a digital euro and the difference between account-based and token-based. We had this already in the money flower. You remember there was also this account-based retail CBDC and the token-based CBDC. And there are some differences if you make if you design it like an account-based central bank digital currency or like a token-based. And let's see what the main differences are and maybe the advantages and disadvantages. Well, the account-based CBDC is a very well-known system because, as I told you, banks have already an account-based CBDC, which are the central bank reserves, and now you only transform it in a way that you say, okay, it's not only banks, but it's every individual, but the principle is the same. So there is no big need in explaining a new technology or adapting to it. But, and it's a big but in my view, this account-based central bank digital currency does not take advantages of the blockchain technology or the distributed ledger technology, which does, on the other hand, on the right hand, the token blockchain-based central bank digital currency. Obviously, it's a young technology with corresponding risks. Maybe the risks are higher, maybe the risks are perceived as higher, even if they are not, because many people are not so familiar with this technology. On the other hand, you have many possibilities in using the blockchain technology. You can, for example, use smart contracts, make the money programmable. And one very important issue is that you can combine it with security transactions. So if in today's world, if you trade a stock or a bond, be it a government bond or a corporate bond, you always have this problem that you make the payment, but the transfer of the security happens only 2 days after, because it's in another system, and you cannot do a business where you change the money and the security in one moment. If you had a blockchain-based central bank digital currency, you could also have the trade of the securities have on the same blockchain or an interoperable blockchain, and then you could really do the payment and the payment of the currency and receiving the security in one step without the risk of having to wait 2 days, and you never know what happens in 2 days. The counterpart could go bust. If it's another currency, the currency could move very, very sharply. So you eliminate risk by such an approach, which can be done very good by a token-based CBDC. Nevertheless, my impression is that the European Central Bank is not very keen in going this way. They are going, well, perhaps they are going step by step, but the first step is, in my view, that they go for an account-based CBDC. Okay, so this is these are the main points okay. I would like to start with, and I have prepared some questions, but I'm obviously open for any other questions you might have.
All right. First of all, since this was kind of the main part of your presentation, we have the tradition here to give reactions, and we are going to do it as well. And now I'm going to try to. Unfortunately, it seems like my connection is a little bit lousy. So I will risk it to put on my camera, to turn on my camera, and hopefully you can see myself as well. And now is the time for questions. I can see that as a professional, you have left some questions for as well, which is we can turn back to them as well. But I will I will give the floor to everyone who wants to give their question, to write it in the chat. And in the meantime, I have a question of my own, which kind of probably you have heard it many times, and it is when we speak about the, let's say, the popular payment and digital payment systems, and the popular, of course, are the ones that you know, everybody can hear on the news every night about. Their main kind of issue, main feature kind of is the decentralization idea. I mean, we speak about the cryptocurrencies, of course, and this idea is kind of the, you don't have anyone to
Connection is bad.
Yeah, just a second. Is it better? Is it better?
Now it's better.
Okay, I will turn off my camera anyways. Sorry for this, but yes, this is
okay.
So yeah, so the idea here.
No, I don't hear you.
The recording has stopped.
I'm here. Excuse me for this. Can you hear me? Can you hear me?
Yeah, I can hear you. Or you write it. But it's okay. Let's try it.
Yeah. So the long story short, how do you defend the idea of centralized digital payment system and currency against the very revolutionary but very close to the people's mind idea of decentralization? How do you defend the concept of being a centralized digital currency?
Well, I think that both systems could exist in parallel. I don't think that we should have, or don't think that we have to choose between decentralized cryptocurrencies and a central bank digital currency. Unless we, or let's put it this way, I'm living, in my view, I do have some confidence in my state, let's say, that they are not misusing my money, and that they do some quite good things with respect to education, to infrastructure, and so on. And so I'm quite happy that they have some monetary sovereignty. Which does not mean that we should not have cryptocurrencies in competing with the state money, but on the contrary, I think that's a very good thing to have this competition also, and to have this new approach, and because it's a source of innovation, and I think that's quite good. But I don't see this as an argument to furlough on state money, on centralized money. I think that we could have both in parallel.
Okay, so it turns out, okay, I understand that a competition on the digital payment is not a bad thing, of course. So it turns out that it boils down to the trust in the central institution. Basically, this is basically it. And
yeah,
it seems like you being, okay, living in a country where you should have, and you have no reason to doubt your central institutions. You are trusting the centralized system, whereas countries around the world, let's say Bulgaria, but not necessarily only Bulgaria, would have issue with not trusting enough. So the central question in finance anyway is trust. So it boils down basically to the trust in the centralized institutions. This is how I understand the general idea here. So okay, this was one question. Another question that I will ask you for sure. You already started, okay, actually teased us with this. There is one country in the world, based on their elections results, their president decided that decisively they're switching to Bitcoin as their legal tender. This is, of course, El Salvador. Sorry.
El Salvador, yeah.
Yeah. It seems like it was revolutionary at one point, at least in the crypto communities. And on the other hand, you can see that right now, currently, the first time that there is a really a crisis in the crypto in the Bitcoin market, you can see that the country has become really unstable. They might need to go to default. So obviously, it is an interesting case. On one hand, somebody brave enough decided to switch to a legal tender in Bitcoin, and then again, this person might be not brave but stupid enough. I mean, we don't know the real answer yet. What is your take on the case?
I'm not fully sure of the motives of introducing Bitcoin as a currency. I understand very well that for example, El Salvador has many people which are living abroad and which are sending money to their families in El Salvador, and they are paying huge fees in doing so. According to the World Bank, it's around, on average, it's international transfer between individuals. It's 6.3% fees. So given that, I think it's some 30 or 40% of GDP which is transferred each year from abroad to El Salvador from people who live abroad. So you can really save huge amounts of money. The question is, do you need really Bitcoin for doing so, for saving this money, or would it be not wiser, for example, to have a well-running stablecoin? It should not be Terra US dollar, but perhaps another one, because if it's a blockchain-based stablecoin, then, or a proof of a stake working stablecoin, then you could have also many do a lot of savings in these transfer, in these remittances. This is one point. So why necessarily Bitcoin? The other point is, which is one argument which I heard often, well, they want to be independent from the US dollar. Yes, US dollar is the current, is the legal tender in El Salvador as well. It has been, I think, since 2001. And they introduced simply the dollar because they did not manage to have a stable domestic currency. Now, and the people argue, okay, they don't want to be dependent on the US dollar and on the interest rate policy of the Federal Reserve. Now, the point is, if you interchange it, or you change this for another currency which you cannot influence either, then I don't see the big profit, the big advantage in doing so. So instead of being dependent of Jerome Powell from the Federal Reserve, you are now dependent on Elon Musk, who tweets something about Bitcoin and sends Bitcoin up and down. So this is not really a big advantage. One point where I see that this may be a good step in doing so is that I see what Bukele has done more as a way of, let's say, industrial policy, in a way that he says, okay, look, guys, I'm introducing here Bitcoin as a legal currency. We want to really build up an ecosystem of crypto in here, and now come into my country and do business here, do this mining, do build up decentralized finance startups or whatever can have a function in such an ecosystem. We build up the internet and much worse. So this may be a thing that may work out because he really commits to this issue to Bitcoin and to the digital world and to digital money, to cryptocurrencies, and so this may trigger new investments into El Salvador. But as a monetary system, it really, as a monetary system, I don't think that this will really work out. At the moment, the experience reports which are coming from El Salvador, they are not really encouraging until now. It's certainly too early to call, but until now, it's in my view, as what I have heard, it's not very broadly used, Bitcoin as a legal tender, due to technical problems and also obviously due to trust problems. And now with the Bitcoin going down, people, it will be even more difficult to convince people to use this as a transaction currency.
Yes, and probably additionally, the infrastructure, in order to spend Bitcoin, you need technical infrastructure, and if it's not in place, then you're not really adopting it. You're actually just forcing your decision, and it's not going to happen with a magic wand. You know, you need to pursue people to get new habits, to earn and spend their money in new ways, and you need to have the technical, not only technical, but really organizational infrastructure laid out before that.
Yeah, and that's what I mean also with industrial policy. He might trigger investments also in the digital infrastructure. This might be an outcome in if we look at it in 5 or 10 years. But at the moment, the infrastructure is not there.
Okay, I'm looking at the chat. It seems like the audience today is a little bit shy, so they're not asking questions. So I'm going to continue with my my questions and my commentaries here. So where do you see the future of the central bank, centralized banking digital system, digital payments? Do you think since large institutions such as, let's say, European Union are interested in this matter, this would be sort of a boost, or do you think that this might be bump in the ride because of too much of a new regulations. What do you think? How do you think the market would okay, not only the market but the environment would change in the coming, I don't know, 2-3 years without being an investment advice, right? Oh.
No, yeah, it's my impression is that the European Central Bank is somewhat slowly and a little bit too cautious in their approach. As I said, for example, in token based, my impression is they will go more the way of an account based CBDC, and with an account based CBDC with such a design, you don't have as many possibilities as you have with a token based currency, digital currency. So if they really go this way of an account-based currency, then I don't see reducing this digital currency. It will be one of many payment systems for most individuals in advanced economies, and you could, with such a system, have, well, a kind of well, it's not revolution, but a kind of making it much more efficient, which is cross-border payments, because the current cross-border payment system is quite yeah, complicated, expensive. It takes very long until one payment from, let's say, here to a company in South Africa is really done, because you have to go to through the correspondent banking system. So you have to go through many banks which are interconnected with each other, and you could really do it in a much easier way if you allowed, at least for the big companies, central bank accounts. So, for example, a big company which is well known in South Africa could have a central bank account with the European Central Bank and receive the money very easily in such a transaction. So this could make payments much more easier than they are done in today's world, where also a lot of time and money is lost. So this might be a possibility to have some advantages also with an account-based system. But apart from that, I don't see so much revolutionary potential, which on the other hand means also that the other payment systems which are evolving now in the crypto space, be it Bitcoin itself and the Lightning network of Bitcoin, or be it also all kinds of decentralized finance approaches based on the Ethereum blockchain, they are even in a better position to evolve because the competition from the European Central Bank is not that high.
All right, I have a follow-up here question. Actually, it was a question that I thought from the beginning, but you end up at this exactly moment where I think I can join in, hoping with my question. It is, do you see I mean, you're working for a bank, and obviously you have the experience with banking. By the way, my background comes from banking as well. Do you think banking as a business is changing dramatically because of the new ways of to digitalize the business, and because of the new ways of the customers to access their banking services? And I'm asking this particularly for example, in Africa, in most countries in Africa, they do most of their financial services through their mobile operators. Of course, the small transactions. Does this mean that there is a new player or a new type of banking emerging?
I think that the banking system is due for a really disruptive development, and it's not, well, let's put it this way. The payment system is one obviously important part of the financial system. It's not necessarily the main segment of the banking sector, of the banking business. The banking business is about extending loans and managing wealth. But what I think is really a threat for the banking sector, but a chance for the economy, is the involvement of the decentralized finance segment. Because what you see there is that really you have all kinds of services which are offered over there, be it extending loans, be it managing wealth, payment obviously also. And so I think that banks in the long run will only survive if they make use of these decentralized finance approaches in a way that they are going to their clients and telling them, okay, look, I don't give you my money, but I give you how should I put it? Well, I advise you with which decentralized finance applications you should work. So it's more about advisory. How to manage money and loans in this new environment of ecosystem of decentralized finance approaches. And the bank itself, in the most traditional way, I don't think that we will see these banks still, at least not in this broad way as in systemic way that we see it right now. And maybe this also means that for example, the regulator, they have also to think again, because maybe in 10 years or 15 years, they would have to look at systemic relevant decentralized finance applications. So imagine that one decentralized finance applications become so big and so much used by the people that you have a systemic risk for the financial system. Then it's more important to look at what is going on in this decentralized finance world than to look at banks. So I think that that this also means that regulators have to think again.
Yeah, I think that the regulators are currently lagging a little bit. They are trying to kind of not look at the we have had this our second guest lecturer was a guy from a lawyer working with legislative issues, and kind of the main topic and the main conclusion there was that regulators try to avoid as much as, at least until now, try to avoid as much as possible decisive actions, and exchanging this for sort of trying to make sure to not see or trying to avoid with legal definitions the cryptocurrencies and the crypto market in general, and I think this is something that we cannot go forever. Obviously, this is not a long-term policy, because at one point, and this point is one of those crashes which we are seeing happening, every second year now. At one point, there will be a huge public outcry, huge public reaction that you will have to, take into account into your next regulations for sure. Right now, I think it's a shame that most of the major regulators, I mean the Security and Exchange Commissions in the United States, I mean the European, actually there are several different institutions in different countries in Europe, but anyways, all of them are kind of going around the problem. For example, the Security and Exchange Commission does not want to pronounce the cryptocurrencies as a financial type of investment, and this, for example, the manipulations on the crypto market are not illegal. So even Musk can manipulate the market as much as he wants. And this is a shame, because everybody else, the regular people, if there are such people, but the regular people see this as an investment opportunity. It doesn't matter that Security and Exchange Commission qualifies it as a commodity. It doesn't matter. This, it's still, and you can see last year, approximately this time, there was another issue with a website, a popular website, which basically manipulates the market heavily. So all those things, the regulators are really late. I think they have to step in. And what my thesis, of course, being more interested in the financial markets than on the technology side of the cryptocurrency. Every financial market, ever since there were financial markets, with more regulations, has become more successful. So there is a balance there. Of course, there are regulations that can kill the market, obviously. And we have such case in Bulgaria. We don't have really stock exchange here. We have banking system very well working, but not working stock exchange. But every time you could regulate it reasonably, more and more people can trust it, and this means it becomes more and more, let's say, trustworthy and usable source for investments. Anyways, I have first of all, I'm not sure how much more time we can take from your from you, and I would like to thank you for sure that you're still with us at this already an hour and 15 minutes. I have two questions that I ask every one of our lecturers, but I keep them for our last finishing touches. If you have anything else that you wish to, I can see that you have prepared something. If you wish to cover one of those questions that you have prepared, this would be great. If you think that we don't have enough time, then we can switch to finishing today.
Yeah, I can share one thing more. Let's see. This is again back to this question: is there a need for a digital euro? And this is the the development of use of effective cash in retail stores in Germany, and in only 40% of the purchases effective cash has been used. In Germany, it's still an international comparison. It's high, but for Germany it's low, and it has gone down. And in other countries it's much lower. And this is certainly one motivation behind the idea of introducing a digital euro. Because what happens if, let's say, all people would use only their deposit money from the banks and making the digital payments with it, and not use cash anymore? This would mean that cash would disappear, and cash is the only form of central bank money that we have today. Mm-hmm. So if we don't have central bank digital currency and we don't have cash, people would only have deposit money, so money with banks. And deposit money is not central bank money, which I said it before, which people in Greece, in Argentina have seen quite clearly when their banks closed. For example, in Argentina in 2001, and in Bulgaria, I think you had also some banking crisis, mm-hmm. Right? So total bank run of all the banks. So right.
We remember those times.
Yeah, and so it's so you need in a way, given the development that you have less and less cash, and this is the only, or effective cash, which is the only form of central bank currency currently, you have to have a substitute for it, and this would be the digital effective cash, if you like. So mm-hmm. So this is certainly one important motivation why digital euro will be introduced. According to Lagarde, this will happen in 3 to 4 years from now. Let's see if they are so quickly. Well, for European standards, it's quickly. So this is one point I would like to add. And we talked already about cross-border payments. Financial inclusion could be alleviated. It's also a motivation that you hear many times from developing countries which are about to introduce CBDC. But obviously it depends on the applications they are introducing, how usable they are for those users. And financial stability, that's another issue, but I've talked also about it. This is the issue that what happens if all the people transfer their banking money to CBDC, and such a bank run will occur. And therefore, the idea is to have those caps on central bank accounts so that they cannot switch all the money to to their central bank accounts. I don't think that this is the best way to handle it, but that's the approach they are maybe going right now.
Okay.
Yeah.
Okay. This is great. This is great. Actually, thank you for this 2 additional great points. Now, I think we are going into finalizing our conversation today. And I have these 2 questions. I will have to explain you a little bit. Our students here, as as instead of having an exam, they will have to write a term paper on a topic that they have selected. And I have provided them, of course, with a long list of topics. There is plenty of things to research and write about, of course. I would ask you, what would be, if you are currently starting to research in the area of cryptocurrency and blockchain, what would be the topics, one or two topics that you would be interested in? And I'm going to add them to the list. Some of the students might be interested in writing about them as well.
Mm-hmm. I think that one important topic could be the disruptive force of decentralized finance for the banking sector. Mm-hmm. I think that there is a lot of movement, and I think that the banking sector is in a way underestimating the potential of the decentralized finance sector to disrupt their business models. And I think that there would be certainly one very interesting subject to go into. And it obviously depends on where you focus on it. If you focus solely on real decentralized approaches which are based on the Ethereum blockchain, or if you go into permission blockchain approaches, or but that would have to be the choice of the one who is doing so. But in general, I think this is a very important point.
Okay, great.
Yeah.
And my last question is, where would you get your what would be the main source of information about the digital currencies, the crypto markets, and so on? What is your main source of information?
Well, the main source of information should be in August, September, my book.
Oh, really? Oh, go ahead, promote it.
But it's in German. I'm sorry.
Oh, doesn't matter.
It doesn't matter. It's called Die neue Vielfalt des Geldes, the new variety of money.
Okay.
And it's about the digital euro, but above all about cryptocurrencies. I think it's a very good introduction into this subject.
Great.
No, but apart from that, it depends on how far or how near you are with this subject. But while I, for example, started in the whole Bitcoin space, I started with Andreas Antonopoulos, mm-hmm. Which is really brilliant, and which has also written one book about Bitcoin, mastering Bitcoin. Mm-hmm. The other is about Ethereum, mastering Ethereum, which he has written together with one of the founders of Ethereum. With respect to digital euro and digital CBDC, I think that there are good basic articles from the Bank of International Settlement. On the mm-hmm. webpage, you can see quite a few very good articles on it, which structure the subject quite nicely. I think if you want to understand Ethereum, I think that the Ethereum webpage itself gives you very good insights. Mm-hmm. Also in this whole process of reforming from proof of work to proof of stake, mm-hmm. Which is a very important issue, and I cross fingers that this will really work out.
We have covered it many times in the previous lecture, so this is why I didn't ask you, but we have covered it many times already, and of course we are waiting for this transition to happen, of course.
Right.
Okay.
These are one of them.
Okay. thank you for, first of all, thank you for your time and for your expertise. I'm sure everybody here likes it. I'm putting my reactions, and I'm sure that everybody else, this is our tradition, would put their reaction as instead of applause. Okay.
Okay, thank you.
Thank you for your time, and by the way, it was really insightful. We are going to wait. I have a scene to present. I didn't study enough German when I had to study it in my high school, and ever since I have this complex of not studying enough German. So you're teasing me for studying more German to read your book, by the way, or wait for it to be translated in English. But anyways, this would be it for tonight. I would ask you a little bit a strange thing. Since I was dropped out of the conversation, I'm no longer the co-host, and I think you're the only host right now. If you right-click on my square, you should be able to make me a co-host. If you could do this, or you should be. I will have to do some administrative works to stop the stream or stuff like this, if this is possible. And for everybody else, thank you for participating today. Our next lecture on next Friday will be, let's say, a practitioner from who has earned prestigious award from IBM, and we will see what are his achievements. And our last lecture will be not on a Friday, but on a Monday, the Monday, May 23rd, where we're going to speak with the guys from the German Financial Commission, which the name was, I have forgotten it, but they are going.
The supervisor, the BaFin, or?
The BaFin, yeah, the BaFin.
Okay.
Yeah, they are going to speak about the case of OneCoin, which is, of course, a famous and a lot of very close to Bulgarian heart, you know. But anyways, thank you for participating here, and I'm going to. Did you manage to make me a co-host? If not,
look, I did not understand what you meant.
So
I have to go to your.
On my camera view, the rectangular, right click, and you should be able to. There should be a make a co-host.
Make a partner what?
You should right click on my face,
yeah.
And there should be a menu, make a co-host or make co-host or something like this.
Co-hoster.
Yeah.
Okay, let's see. Video anhalten, muss man den Pfad rausstellen.
If not,
no, it's.
If not, you.
Yeah, I see it.
Yeah. Okay. All right. Now it's great. Okay. I need